With a relatively young population and given their affinity to technology and innovation, the potential for shared agency banking in Uganda looks limitless. However, this success has not been without its challenges, with COVID-19 pandemic that led to a lockdown and slowing down of the economy hitting hard. But these challenges are in many ways also lessons to be taken into consideration for scale.
So if we look back in 2016-2017, the mobile money market in Uganda was reasonably mature. For most people, mobile money agents were and still are the most convenient point of access. It is the first shared agent banking platform on the African continent. So there was a lot of learnings for FSD Uganda as a facilitator itself. One of them being clearly understanding what is the impact that we want to achieve, how is it going to help the underserved, then understanding the various incentives of different actors in the market.
COVID has been a good lesson for everybody. I mean, it was not anticipated. It caught everybody off guard. I mean, some of the things that people have been forced to do or not do were happening for the first time. What happened with the impact that we had is that we were just starting the journey of onboarding new agents and merchants. And obviously with the government's restrictions and curfews being set up, we were literally almost grounded, because that means that agents could not open shops, as well as our field officers who are recruiting new agents could not go into the field and recruit. I would say that adoption of technology came in handy, that we were now being forced to use the existing and reach out to existing agents digitally. As I said, is opening digital account opening, allow paperless account opening. I think we have seen that happening in Kenya and some other countries like Rwanda, and now Tanzania has taken up. And that would mean that the traditional account opening requirements are actually being reduced, what we call minimum KYC. That opens up another opportunity for those that are not maybe very literate, and use of digital biometrics for authentication instead of passwords are some of the additional ones that we have seen take up in other markets.
You know, in March, what happened was the country went into lockdown. And what that meant is there was no transportation, you couldn't, even though financial services was declared an essential service, agents still need to get to bank branches to deposit the float that they have, get electronic value, etc. It was just impossible. So agent transactions just fell down significantly. Their own agent revenues went down significantly. In a COVID environment, conversion of human behavior and pricing, because people can be very price sensitive, to digital platforms and to allow money to move without cashing out is something we need to consider for the future. For a temporary period during COVID, we had all bank to wallet, wallet to bank transactions being made free for a small amount of time. A shared platform is a long-term play. So it requires significant upfront investment from commercial banks and other players who want to ride on this platform. Till there is enough agent penetration across the country, enough reasons for people to continue using agents beyond just cash in and cash out, it will take time, and that is one of the biggest lessons learned.